In the current hot real estate market, appraisals are becoming a more and more complex and important piece of the offer process, and in many cases, they can be what makes or breaks the seller's decision of which offer to select. I'm Peter Boscas with Red Cedar Real Estate, and in this video, we'll explain the different levels of appraisal protection buyers can add to their offers to make them stand out against the competition, and how these options could impact the seller's bottom line. The traditional appraisal process is meant to offer a high level of protection for buyers against theoretically overpaying for what a property is worth. Or at least that's generally how it's understood. The truth is, an appraisal is more of a protection for the lender. Though the home buyer is technically buying the house, usually the lender has a lot more risk and money involved in the purchase, so they want to be as protected as possible. The bank wants to make sure if they're lending a buyer $500,000 for a house, that the house is actually worth that much, just in case the worst case situation happens and they have to foreclose on the house and then sell it. If a buyer's paying cash for a home, they can still have an appraisal done for their own peace of mind or protection, but it isn't required like it usually is for a mortgage purchase. The way the traditional appraisal process works in Maryland is fairly straightforward. Once a contract price has been agreed to, the buyer's lender will initiate an appraisal on the property. If the appraised value is lower than the agreed to sales price, the buyer has the opportunity to ask for a price reduction. For instance, if the contract price is $500,000, but the home appraises for $450,000, the buyer would then be able to ask the sellers to reduce the price to $450,000. At that point, the sellers could either agree to a price reduction or they stand firm on the original contract price. If the sellers aren't willing to compromise on the price, the buyers would then be able to cancel the contract with no penalty, and then they would receive their deposit back. It's very important to note that the lender is going to provide a mortgage to the buyer based on the appraised value of the home, not necessarily the purchase price. So in the same scenario, if the seller's unwilling to lower the price, but the buyer still wants the home, the lender will only lend based on the $450,000 appraised value, and the buyers would have to come up with the $50,000 difference in cash. This would be in addition to the original down payment amount. So you can see this is an important protection for a lot of buyers, especially if they're financing the purchase, since they may not have the additional funds available to pay more than the bank is willing to lend them. In this example, if the buyer didn't have the additional $50,000 in cash, they simply wouldn't be able to buy the home. So they need this appraisal protection to be able to cancel the sale without a big financial penalty. On the flip side, the most aggressive approach to buying a home in the current market would be to waive the appraisal protection entirely. This can be a very risky option, and it's usually only advisable for buyers who have a huge amount of cash reserves they're willing to put into the purchase. Now, the reason this is risky is because the appraisal is a subjective opinion of the price, and it's done by a single person. And just like any other profession, there are good appraisers, bad appraisers, and in between. In the case of a mortgage appraisal, the appraiser is assigned completely at random, so the agents and the loan officer will have no idea who the appraiser will be or their level of competence. Sometimes the appraiser assigned comes from out of state or they're not familiar with a particular neighborhood. We'll talk about how an appraiser can botch the process and how you may be able to fight a low appraisal in a future video. So be sure to like, subscribe, and turn on notifications if you'd like to learn more about that process. Now, botched appraisals don't happen very frequently, but there are times when an appraiser will give an unexpectedly low opinion of the price of a property. And for the buyer, if you've completely waived your appraisal protection and you get a faulty appraisal, you could be on the hook for tens or even hundreds of thousands of dollars. Generally speaking, a great buyer's agent is going to put together a comparative analysis for their clients before writing an offer so the buyers have a sense of what the property should be selling for. And a listing agent should be doing the same thing when helping the sellers determine an appropriate listing price and explaining what the market may pay for the property. A skilled agent can usually predict pretty successfully what a property may appraise for. So there can be some educated reasoning as to what a buyer's exposure may be for covering the difference between the purchase price and the appraised value. But unfortunately, there is just no accounting for an appraiser who uses old sales or sales from a different city in their analysis. And this is why totally waiving appraisal protection is risky. Now, just like the other contract variables in the GBV series, there is a middle-of-the-road option that's more aggressive than the traditional appraisal approach while also affording the buyer some protection. This option would be to set a particular amount of appraisal coverage at the onset of the offering process. For instance, if a buyer has an additional $20,000 in cash they're willing to put into the transaction above their down payment and closing costs, they can offer to cover up to that amount if the appraisal comes in low. To use our previous example, if the buyer has a house under contract for $500,000, but it appraises for $480,000, they would still buy the home for $500,000, but they would use that $20,000 in cash to cover the difference. However, if the home appraised for $460,000, they could ask the seller to lower the price to $480,000, which would be $460,000 plus the $20,000 in cash that they had. If the seller didn't agree to the reduction, the buyer could cancel the sale with no penalty. So with this option, the buyer is still being aggressive by offering the seller potentially more than the home may appraise for, but also isn't overextending themselves or risking having to come up with cash that they may not have. It's important for sellers to understand these various options as well, and a good listing agent will explain the different appraisal concerns as the seller is reviewing their offers. For example, a full appraisal waiver from one buyer may not be that much more aggressive than another buyer who's offering a significant amount of appraisal gap coverage, depending on the sales price and recent sales in the neighborhood. Finally, for buyers, there is one more thing to note with your appraisal options. There are certain lenders who may actually allow for you as the buyer to entirely waive the appraisal depending on the purchase profile. If your credit is strong, you have a decent down payment of usually 20% or more, and the automated valuation of the house is in line with the purchase price, the lender may offer you the option of waiving the appraisal process. If this is an option for the buyer would then be able to make their offer to the seller without any appraisal contingency, because there would be no concern of a low appraisal amount since the bank has basically already agreed to the purchase price of the home being the value of the home. The flip side of this option is that the buyer won't have an appraisal done on the property, so it's important that the buyer feels that the price that they're paying is reasonable and that they're comfortable with it. And this is why it's so important to find a good agent and loan officer who understand these options so they can help you prepare the most competitive offer possible and help you stand out above your competition. In our next GBB video in this series, we'll be covering the various options of pre-approval letters buyers may submit with their offers to help them stand out, as well as what sellers should be looking for to be sure their buyers are fully qualified to purchase their home.